Thank you, first of all, for inviting me. It's a pleasure to be here. Some people read my talking points and said that's not very cheerful at all. So, having listened to the discussion so far today, I've learned that there's no problem in Europe today that cannot be solved by unlimited amounts of stupid German money, as long as we're willing to turn Europe into the United States of Europe. So I think there's reason for optimism, if that's the conclusion you want to draw. Here are my main points. I think the current policy mix isn't working and it can't work. I think the alternatives are not really politically feasible. We're right at the limit of what the political system can deliver in Europe, and something's going to go wrong very soon. And my conclusion is that leaving the euro is the least bad policy. And the main question to my mind is how to do this right. And my nightmare scenario is that we don't get this done. That in 10 or 20 years' time, we will still have the euro, and we will have condemned an entire generation of people in Southern Europe to unemployment and a life wasted living with their parents in the basement. We know how things got so wrong. The diagnosis, I think, is shared by everyone. We know that one-size-fits-all monetary policy was a bad idea, that financial regulation was very loose, that the existing degrees of freedom to actually cut back on lending in good times in the South weren't used. There was a certain degree of cheating in the national accounts of some member states, but in countries like Spain, for example, and here I differ a little bit with Lars, there's really no sense that that the government overspent. You combine this with rigid labor markets and you get huge problems in terms of competitiveness. And I think in some ways the saddest chart and the one that makes life particularly hard within Europe is this one here. It's the unit labor cost. So this is looking at 1995 as 100 for the different member states. You can see how everybody in the former soft currency countries is shooting up as the big borrowing binge gets underway. And then after 2008, unit labor costs start to come down a little bit, and the German line is starting to wiggle up a tiny little bit. And if you look at, for example, the blue line here, that's Spain, that's come down from 150, so a unit labor cost disadvantage of 50% compared to 1995, to 140 by now. Okay, so that's 4 years of unemployment of 25%, of youth unemployment of over 50%. That's how much austerity has bought us so far. Okay, so that's why I think option A, 20 years of grinding austerity, is really not much of an option at all. The closest we ever got to this policy prescription is in the form of Andrew Mellon's famous liquidate the workers, liquidate real estate, liquidate the farmers, and so on. So if you continue with this policy mix, the only benefit you're going to get, and echo somewhat what Lars was saying, is that there's a certain warm glow of punishing people who overspend that will be apparent in Calvinist and Protestant countries. But apart from that, I don't think this can work, especially once you start to think about the role of private debt. Because these countries don't just have high levels of public debt by now, Southern European countries, but private levels of debt are very high. A typical Spanish family will maybe have net income of 2,000 euros, of which it spends 1,000 on mortgage payments. And if you take down their take-home pay by 20%, then you're going to squeeze their disposable income by 40%. I don't think that's feasible. I don't think this is a level of austerity that Weimar Germany could survive, and I don't think that democracies in Southern Europe can survive it either. And we're starting to see the signs that this actually starts to go wrong. We see lots of unrest in some countries, and more is probably underway. And the other thing that I think is happening at what I think is a shocking and depressing rate is that we're undoing and undermining all the efforts to make Europe a more cohesive, more friendly, more internationalist, less xenophobic place that took place in the last 50 years. Somebody once joked that the European Union was designed to allow the Germans to reapply for membership of the human race. And I think that worked very successfully before we invented the euro. And what we get today are pictures like this. So if you actually talk to Greeks, you look at the Cypriot demonstrations and so forth, all of a sudden Germans are ugly again. All of a sudden we're the people with the jackboots forcing people to do things that they don't want to do. And I think we're destroying a huge amount of the goodwill created by the European Union almost overnight as a result of the current policy mix. This is a chart from some joint work with a former student of mine, Giacomo Ponticelli, where we actually look at the relationship between unrest and austerity, and we've done it for Europe and for South America for the last 90 years. And we look at the number of riots, demonstrations, anti-government strikes, and political assassinations, and we look at how much this changes as you change expenditure. So as the bars change here from blue to red to dark red, the level of expenditure cuts goes up, and you can see this direct relationship with the number of incidents per year. Okay? So what this is saying is that we're creating a huge level of potential social instability with the austerity measures we're currently undertaking. And we haven't seen anything catastrophic yet, but the way these things typically happen is that something goes wrong somewhere, some policeman panics, and all of a sudden you have 20, 30, 50 people dead, and there's a sudden consensus that policies cannot go on the way they are. Okay, so what's option B? People have talked about this already. It's party time in Northern Europe. So you let German wages rise above inflation. You maybe do some of the infrastructure spending that Bradley Long mentioned as a possibility, and you'd have to do this not just in Germany, but in the Netherlands and Austria and Finland as well. The problem, of course, is that these countries don't just trade with the rest of Europe, they also trade with the rest of the world. And in a rapidly aging country like Germany, having export surpluses vis-a-vis the rest of the world is probably not a bad idea. So that's probably going to be problematic in some ways. It's unclear if governments in the north will actually stomach this, not least because there's a strong lobbying effort to keep current account surpluses strong. There's, for example, no support for the political alternative to EU membership from big business in Germany at the moment. And people feel that they worked very hard by, for example, not spending, not getting wage increases for 10, 20 years to regain competitiveness, and now to throw this out of a window as a result of a crisis created by others is probably going to be very, very difficult to sell. Option C is permanent transfers. That's the policy option I alluded to in the introductory statement. You can find ways to sugarcoat this and say, let's not do it in the form of big checks being written by the Germans. Let's do it through a social insurance system. I'm not sure that this will actually be politically feasible at all. I think we're right at the limit of what's possible at the moment. If you look at the discussions in Germany about the very, very small package for Cyprus, the possibility of writing just one extra check, I think, is almost impossible. Having a European-wide form of whatever type of social insurance you have in mind, I think will not get you any political support, and I think I have some sympathy for the underlying view. I don't think that this is just stupid peasants with pitchforks keeping politicians from doing what is right. I think it's very difficult to tell voters in the north why, if they actually pay a lot in taxes relative to GDP, they have to transfer some of that money to the south, which is unable and unwilling to actually tax most of its inhabitants, especially richer ones. And as long as that's not fixed, and it's a very difficult thing to fix because it actually connects with many of the cultural issues that Lars mentioned, I think it'll be almost impossible to do right. What's option D? And option D is actually to get out. As the Germans would say, an end with horrors is better than a never-ending nightmare. And you can take various forms. You can imagine the southern dominoes falling, or Germany leaving the euro, as George Soros suggests, is a good idea, probably taking Austria, the Netherlands, Finland along. And this is no longer unthinkable. In some ways, we're already paying the cost. One of the big costs that people always mention that would make this impossible, which is to recapitalize the banks. We always said this cannot be done. It's just unbelievably costly because you have this asset liability mismatch, and then if you actually leave, the bank balance sheets will blow up. But we're recapitalizing the banking systems of lots of states already. Why not get something in exchange? Why, in order to regain competitiveness, do we have to change millions of prices and wages instead of just one price, the exchange rate? Many of these banks are now government-owned. Cross-border lending has disappeared already. This is going to be much easier now. And I think the path to this is politically feasible. I have my doubts. But I think it's very clear, if you did a straw poll amongst people in this room, nobody in his right mind would say, we want to recreate the euro. If we could do this again, we would not. Certainly not with the current set of members, and probably not at all. So once you agree with that conclusion, then the only question is this temporary crisis that we now have to go through to undo it so painful that this cannot be contemplated? And yes, it means a massive loss in institutions of Europe. Yes, it means admitting that you made a mistake. But it's clear that you're going to restore competitiveness in countries that in the past only regained competitiveness by periodically devaluing, that do not have labor market institutions and political systems that can actually deal with austerity and regain competitiveness through wage cuts. And eventually growth will resume in these countries, even if the transition is messy. And I think if we actually do this soon, then the damage for the European project will be much smaller than if we do another 10, 20 years of the current policy mix. Okay, so I think it'd be nice to think that some combination of option A, B, and C can work, but you need lots of factors and lots of luck. I think the most likely one is that we're going to condemn those generations in Southern Europe to a lifetime of not having a proper job or any prospect. But I think the thing that I would like to see more discussion of is just starting with things like Alternative for Germany, that people seriously think about how to actually undo the current fiasco. And sometimes history moves faster than we think it can. So we all know the famous episode when the governor of the Bank of England is actually on the high seas coming back from the United States when Britain leaves the euro in September 1931, and then the governors meet him when he disembarks and tell him that they've left the gold standard, and he apparently said, I didn't know we could do this. So that tells you just how rapidly the framing of certain questions can change. I think the thing that is probably less well known is that one of the things that changes the mind of the British establishment in 1931 is that there's a mutiny by the Royal Navy in a Scottish port called Invergordon as a result, amongst other things, of wage cuts. And I think this very clearly underlined to everyone that the limits of austerity were being reached. And what I think is increasingly likely to happen is that there will be some political event, whether it's a demonstration going wrong or another bank needing recapitalization in a country that's unwilling or constitutionally unable, such as in the case of Portugal, to do much more, that will change the policy consensus and you get a messy exit and falling apart rather than a controlled one. And I'll leave it there.
Okay.